Joining us now is Peter McGuire from XM Australia. Peter, hi, good to have you. And I want to start the conversation with gold prices because we've seen nearly 3% of a decline in this week itself. This perhaps is going to be the worst week since the month of January, where we have seen a very sharp decline come in. At these current levels, do you think we are closer to bottom or there is further downside coming?
Well, Manisha, and good afternoon. I mean, a couple of things. First off, you've also had a very strong rally to the upside as far as US dollar index over the last 4 or 5 trading days this week. And where you're looking as far as gold, it was sold off. I think it was some profit taking in there. Yeah, it got spanked down and it's certainly volatile. So I think I wouldn't be surprised to possibly have another bit of a further softness. But I think the overall storyline is very much bullish for the rest of the year. And we've just got to see how they go with the debt ceiling. That may be resolved very, very soon. So I think it's just, it's all adding to the mix.
We saw the month of January at 1,810 of a low as well. The high, of course, has been at 2,080. Yeah. If this current level of 1960, 1950 breaches on the lower side, where do you see supports come in?
Well, yeah, I think about 1930, 1920, but it's got to get there. And for that to happen, I think you've got to have a fairly strong move to the upside for US dollar index. If it was through 104 or 104.20, then that may add a little bit more horsepower to pushing gold further down. So that's where we're running, Manisha. Yeah, you could see a little bit further sell-off, but, I wait till we get to that point and then I'll reconsider.
Well, absolutely. You talked about the debt ceiling and, the bets on the fact that the US Fed will pause rate tightening were very high. I mean, 90% is what CME displayed, that you wouldn't see another rate hike, at least in June. There would be a pause. I mean, that number seems to be declining now. We're just about at 65, 70 right now. So that also is a bit of an uncertainty adding to the market.
Well, exactly right. And, and they're all tipping that in. And then you're looking at the other side. It was only a week ago and we were saying 3 rate cuts from September, 325 basis points, September, October, November. And now they've pushed that one out from December to January next year. So it's only 2 for this calendar year. That's what they're forecasting. So, yeah, it's we're a long way from Christmas time. And I think there's plenty of water to flow under the bridge yet, Manisha, with volatility and excitement for the market.
And today's going to be an event-heavy day in that sense, Peter. You have the US Fed talking in the evening today, and then it also is the G7 meeting, which already has begun, talking about more sanctions on Russia.
Yeah, well, that's exactly right. And, this weekend in Hiroshima, it'll be interesting to see what they concoct up as far as the Russia situation. And we all know that, Russia's economy, I don't know if it's that bad as what everyone's making out. The sort of numbers that I hear from it, it's got strong export as far as into China and certainly to other markets for crude and for other parts of energy. And of course, its agriculture is reasonably strong and base metals are doing, okay. So, yeah, we'll just have to wait and see how it bites and how it all flows from here, Manisha.
What's your sense on the metals as well? Because, there have been statements from European Union, even US for that matter. UK has talked about banning Russian platinum and various metals like copper, nickel, aluminum, etc. We haven't seen that premium come in for prices. I mean, a couple of years ago when that conversation came in, we saw all the metals run up. But even as the G7 is meeting, as we talk, we haven't seen any of that really being taken into consideration.
No, exactly right. I mean, you're looking at copper well down. It's around about that 8,100, 8,200. So, yeah, nothing's flowed across to that. And a lot of the other metals are fairly relatively soft. So, yeah, it's though from the metal side of things, you've got to be conscious also you need demand. And we've just got to see how the world trades over the next, say, 3 to 4 months over this summer period, whether there's investor confidence and sentiment returns or rates are certainly impacting households and spending budgets.
Absolutely. I also want a sense on silver prices because we've come off quite strongly from the resistance levels of $26 an ounce on the higher side. So even as most banks, whether it's UBS, ANZ, Citi, ABN AMRO, telling us that 2,100 for gold is a possibility before this year ends, would you be more bullish gold or silver by the time we are end of this year?
Oh, Manisha, that's a hard one. I mean, I think silver's got probably more run-up potential. But, yeah, I think they'll both be carried in tandem. So I think that probably I'd be backing probably silver. I think it's got more legs. And at these sort of prices, you know, you're running 23.75, 23.80. I think it's probably undervalued at the moment, but I think it's going to be wild again for that silver market. There's underinvestment in it. That's a simple story.
All right. So, well, it's a tough one to pick up. But yes, as you said, silver perhaps is still undervalued and more highs is where we can see that. Peter, thank you so much as always for joining us and talking about that whole host of commodities with us. With that, we'll take a very short break. Stay tuned. We're coming right back.